Welcome back. You're watching the ET Money Show with me, Srishti Sharma. And like we promised, we are going to discuss about your bonus money that you are expecting. Your appraisal must be over now. The annual bonus you must be expecting for one. And not just that, you must be hoping for a raised salary as well. But the point now is, in the going financial year, where you should park this extra money to earn extra. For that, we have a very interesting conversation with our expert. But before we go to that, we have something to show you. We are coming up with a calculation which actually tells you how much are you going to save with your increased salary. Suppose you are having an increment of an example of 10%. The inflation at current juncture in India is around 7%. In this calculation, when your salary is raised from 100 rupees to 110, your expenditure is actually raised by 7%. Calculating that, how much you are actually saving, instead of 30 rupees in the last year, you are now in actual terms saving 35 rupees. But actually doing and adjusting this for inflation, you are going to save just 3 rupees and not 5.1 rupees, which is in nominal terms. But in real terms, when you adjust that for inflation, it's just 3 rupees. And in percentage terms, if you see, the saving is just of 2.7%. This is not less given the kind of challenging environment we are living in. But now the question is, where do you really plan to save this money? You have set goals. What do you want to do from this money? The second question is, do you really want to beat inflation out of this? Or whether you should go for some tax planning. We'll discuss all of this with our special guest onto the show, and which is Mrs. Shweta Jain from Investography. Shweta, thank you so much, and a very good evening to you for all your time to ET Now. My first question to you is that everyone wants to have extra return. Now, without making changes to the asset classes, where do you think one should be looking to allocate that extra money? If you can help with the category and the sequence that people should be looking forward to.
Hi, Srishti. Thanks for having me. So it is always the allure of higher return, right? While not taking on too much risk or extra risk. So it's really interesting that we don't want to take risk, but you want that higher return. So when we are looking at risk versus return, one of the things that we should look at is growth assets. So, for example, equity is a growth asset, right? So anything that you can commit to for long term, which has risks, would be a growth asset. So when you're looking at equity, and even if you already have exposure, especially if you already have exposure, then you can look at, say, if you've been investing in large cap, you can look at mid and small cap as a category. So while you're not increasing the risk per se in the asset kind, you're increasing the risk by looking at smaller companies, for example. So that way you can increase your return also. But of course, your time horizon will also increase, but without compromising on the kind of asset you're investing in. This is something that you can look at. But for first-time investors, I would definitely recommend that you stick to large cap first. Also very important, we don't really have our asset allocation sorted out usually. What happens is we look at just the money that is available with us or that we've invested freely before looking at that in total. We forget about the PF money that has been invested or the insurance money that has been invested. So I would recommend that investors look at their portfolio in total and then see how much they're actually investing. For example, from your savings, you could be investing, say, 100% in your equity, right? But you may have just started that, say, last year. And your PF money, you could have been investing for, say, 10 years. So if you see comparatively, your equity money, while you feel that, 100% of my money is going there, it may actually be a very small chunk. So you have to look at that in total and make sure that your asset allocation is right.
Surely, take your point, Shweta, but people do have liabilities to pay back. They have different kind of loans. Either they are going for some kind of loans in the new financial year. With this extra money, should one opt for paying more for that? Like previously, when I was paying 10,000 of rupees, with this extra money, should I be trying to pay more so that my liabilities are chucked off a little early? And also, how does inflation play a role in this?
So this is a very interesting question, Srishti. So liabilities, I think each one has a very different approach and should have a very different strategy to pay off. For example, if I have home loans, then it may not be a very wise idea to pay off the home loan or even a part of the home loan when I've received some bonus. But if I have a credit card debt, it may be a good idea to pay that off to whatever extent that you can, or if a personal loan, to pay it off. But like I said, to each his own, because you have to match your cash flow, you have to match your goals, and you have to make sure that you're doing the right thing. Say, for example, you're paying off a home loan, but you're in the later stages of the home loan. Say you've paid off for, say, 9-10 years, and you have it for another 5 years. So what happens in a home loan is that you pay off most of your interest upfront, right? So in the initial part of the years, if you check your EMI calculation, your principal amount is much lower than your interest amount. So a bulk of your EMI is going towards interest. So towards the latter years, if you're going to pay off your loan, you've actually not benefited that much because your interest you've already paid, right? So it is a smart thing to review your liabilities and take a call according to your situation and according to the kind of loans. You have to be very smart about it. Also be aware that inflation is inching higher. So you have to make sure that your money is working for you as well. So it doesn't help your case if you're going to be 45 and debt free, but also have no significant or equity assets, right, or growth assets. So you have to make sure that that combination is absolutely right. Otherwise, inflation is going to eat up bulk of your earnings.
Okay, Shweta. Now my next question is to you is on the bonus money, because we do receive a lump sum amount when we are talking about that bonus chunk, and that's a substantial chunk. So what will be your advice on utilizing that money for some planned expenditure, if I have any? Should one be opting for an EMI instead of utilizing that bonus money as a lump sum payment and spending all at that one go, or rather opt for an EMI and then utilize the other part of the money in investment so that I can have some better returns as well? What will be your advice?
So Srishti, it's interesting because you brought up bonus and spending in the same sentence, right? In the same breath, because a lot of people that I talk to actually anticipate bonus and spend the bonus money even before it has come in. A lot of people do that. So I would recommend that you hold off on the spending for a little bit, because it's really important that you actually save that bulk amount a little on the side and not really increase your lifestyle expenses. It's really, really important that you look at spending, but also look at investing. So to that extent, I think if you're going to do a bigger purchase, an EMI may not be a bad option if you're going to manage your cash flow well. But having said that, EMIs condition you to spend more than you can actually afford at times. So you have to be very smart when you're spending your money. So don't just spend in bulk when you're getting a bonus. My son likes to do this, when we're spending in bulk, saying, money, money, money. So don't do that. I know how it feels when you get a bonus. So don't really look at increasing your lifestyle expenses immediately. Hang on to that for a while. Think about what you really want to spend on in today or the future. Because while we are saving and investing for the future, we are looking at a future expense itself, right? Whether it's a holiday, whether it's a car, whether it's a home, whether it's education for children, whatever it is a future expense. So see what really matters to you and do the right thing for you. Don't think about what somebody else is doing. Somebody else may blow up that money on a vacation. Maybe that's not the right thing for you, but immediately it may feel that, what, I should go because I can afford it now because I haven't done this for 2 years. Don't find excuses. Think about it with a calm mind and see what really matters to you and then spend on that. Between bulk and EMI, my vote goes to bulk usually because EMI conditions us. But like I said, do the right thing that is for you. If you take EMIs, you could invest the bulk amount and pay off. So interest rate also matters. If you're getting the EMI at 0% or a much lower percent than say 6 or 7, then you could take that EMI as well.
Okay, thank you so much for that take, Shweta. And my last question to you is on tax planning, because actually tax planning is something which most of us take seriously during the last days of the March. Our eyes get open that we really have to invest in some place so that we can declare in the tax. But we are sitting in the month of April. What could be the options for us if we wish to plan early, and how it might benefit them? If you could just highlight for our viewers, because we are now having that extra money. So are there any options available so that we can park those monies and reap those benefits in terms of tax benefits? What's your take on that?
I think it's a great time to invest for tax saving. Initially, beginning of the year, you have your mind freer. You are under no pressure to choose the right option. You are also looking at your goals. You're looking at various other things. You're planning for the year. So it's really a great time to start tax planning. You also have bulk money. So for example, if you want to invest as a lump sum, you have that so that there's no pressure at the end of the year. There's no pressure through the year as well. So it's a really great time to do that. You must look at various options before you decide, and you have the time to do that right now. So PPF, whether it's ELSS, you can choose what is right for you. Life insurance premiums, if you are adequately insured, if you're not adequately insured, now is the time to review all of that and take the decision that is absolutely right for you, absolutely works for you. ELSS, for example, you could do a monthly investment and you can average out your cost. So rather than take wrong or bad decisions in March, I think it's time to take the right decisions today. And if there are people who, of course, don't want this pressure, so, invest it at one shot and you could do that. This is the time to also remember, because if you've just done the planning in March, and you were in a sort of a rush and you thought you didn't take the right decisions, you have that lesson afresh in your mind. So this is the time to apply that right away. So if you don't want to commit to a insurance policy, if you don't want to look at safer options, say you last year committed to a 5-year FD, for example, now is the time to look at ELSs, and now is the time to look at a PPF, or look at term insurance for that matter. So take the call that's right for you, and you have the time to do that right now.
Well, thank you so much, Shweta, for highlighting all the options that are available for our futures if they want to plan do their tax planning right away, sitting in the month of April. Thank you so much for this insightful conversation and joining us today on the ET Now.
Thanks for having me.
Okay, but it's time once again to slip into a short break, but you don't go anywhere, because on the other side of the break, we will be talking about, for your benefit, on how to prevent yourself from online privacy, how to actually prevent yourself from getting hacked. And for that, we are being joined by an expert as well. So you stay tuned with us.